Good day, everyone. This is your European Open briefing for Tuesday, August 23rd, 2016. My name is Selena Nicholas, currency analyst at XM.com. We'll look at what's happening in the markets this morning. It's evident that there is low risk appetite, and it's helping the safe haven yen. We had some data out of Japan for manufacturing PMI, which showed signs of steadying in August. We have more PMI data out of the Eurozone, and the NZDUSD governor spoke this morning. His rate view lifted the Kiwi, and oil slipped again further today. So let's start with the New Zealand dollar. It saw a big spike up early in the Asian session. Reason being the Central Bank of New Zealand Governor Graham Wheeler was giving a speech and mentioned he did not see a need for rapid succession of rate cuts, and this helped support the Kiwi. Also, the governor signaled that further rate cuts were possible in the amount of around 35 basis points, which is slightly lower than market expectations. So this is also helping the Kiwi, and we saw the New Zealand dollar jump. It spiked up after his comments to 0.7324, and then last traded slightly above this. That's 0.7326 heading into the European session. I'd like to point out that the New Zealand's official cash rate is already at a record low 2% after the RBNZ its latest cut in August. So it's still the highest rate though in the developed world. Let's take a look at the US dollar now. It seems to be broadly lower. And then we saw the USDJPY dip briefly below the key 100 yen level before stabilizing. Now low risk appetite is helping lift the safe haven yen. We also had data out of Japan. Flash manufacturing PMI rose in August to 49.6 from 49.3 in July. The Bank of Japan Governor Haruhiko Kuroda was speaking today, but he was speaking at a fintech forum in Tokyo, so he didn't really mention much about monetary policy. There was no jawboning, so there's really no impact on the yen. Now let's take a look at oil prices. Oil again slipped for a second day. It's had its longest streak of consecutive oil gains in 4 years until last week. But today WTI oil dipped to 46.60 in the Asian session. Last traded around 47.10. There is still an oversupply of oil, and it's pressuring prices despite recent reports of a possible production freeze by Saudi Arabia and Russia at an upcoming OPEC meeting in September. It's an informal meeting, but there were recent reports that they were willing to cap production, and that also helped the rally in oil prices last week. This move up was driven by it was not really driven by better oil fundamentals, but instead just by headline news around a potential output freeze, and also the weakening dollar helped a bit last week. Now let's take a look at the euro. It has been doing well so far this week, above the 1.13 level against the dollar. We saw a spike up this morning after some French PMI data that beat estimates. The composite number beat estimates to rise to 51.6 versus 50.4 expected. German PMI composite not so good though. So the euro's rally kind of halted there. German output growth slowed, and service providers reported the weakest expansion for 15 months. So this affected the overall PMI number. But we have the overall Eurozone PMI number coming out soon. and also the US PMI from market, as well as US home sales data will be out. We'll see if this will impact markets. But more or less, we can see that markets are taking on a wait and see mode. And that's because a lot of traders are looking ahead to a key risk event. The highlight of the week will be the Jackson Hole Summit in Wyoming, USA. It's a meeting of central bankers and global finance officials. Fed Chair Janet Yellen will be speaking on Friday. All eyes will be on her to see if she'll talk about rate hikes, give any clues on when the next rate hike will be. And if you remember recently, some Fed speakers, William Dudley, Stanley Fischer, were in support of a rate hike before the end of this year. So everyone will be watching to see what Janet Yellen will say on this. Thank you for watching and have a great day.